Hey guys, so today's video is going to be on Dreamfolks Services Ltd. Why, you might ask? Well, there are a couple of reasons. Number one, the company has an interesting business model. Dreamfolks is India's largest launch access aggregator company. So if you have visited an airport launch recently, the odds are pretty high that it might have been through Dreamfolks directly or indirectly. Number two, look at this chart. The company got listed in September 22, and after hitting the all-time high in around July 23, the stock price plummeted about 45% from all-time high levels. So that got me curious as to what the reasons might be. So if you are also curious about this business, watch the video till the end as we uncover the business model, industry structure, growth strategy of the company, financial performance, recent quarter results, and also the challenges faced by the company. Alright, so let's start with the introduction. Dreamfolks was established in 2013. The company started its business by providing launch access services to the consumers of MasterCard. Then later on, the company added other card network companies such as Visa, Diners, Discovery, RuPay, etc. The company then onboarded card issuer companies as well, like ICICI, HDFC, SBI, Kotak, etc. More recently, the company expanded its client base further to include airline companies, e-commerce platforms, online travel aggregators, etc. So what does Dreamfolks do? Dreamfolks provides access to the airport launches. So the company covers about 74 launches in India and internationally, which includes about 100% operational launches in India. The company was the first mover in this space and enjoys about 90% market share in card-based launch access and about 68% market share in overall launch access market. But the company's service doesn't just restrict to the launch access. Dreamfolks provides other airport-related services as well, like foods and beverages, spa and wellness, baggage transfer, meet and assist, etc. These kind of services are more relevant for the passengers traveling to international destinations, especially at unfamiliar destinations. So just to give you an example, if you are visiting an international destination for a medical visit, let's say, so somebody can meet you at the airport, guide you through the whole checkout procedure, and help you reach to your desired destination, which might be a hospital, doctor's place, or something like that. So Dreamfolks provides all this kind of services. But the key thing to remember here is that 90% of Dreamfolks revenue comes from the launch access services. So that was a quick introduction of Dreamfolks' business. Let's just deep dive into Dreamfolks' business model. So look, Dreamfolks at the core is an aggregator platform, right? So it integrates all the relevant stakeholders here, including card network companies, card issuers, end consumers, launch operators, onto a single technology platform, right? So how does a typical value chain look like in this case? Well, it starts with end consumers subscribing for particular brands of cards with the card issuing banks. So whenever these end consumers access an airport launch through their debit or credit cards, card issuing banks need to pay a certain agreed fees to Dreamfolks, and Dreamfolks in turn pay to the suppliers, that is launch operators. So Dreamfolks charges its client based on the number of times these end consumers have availed launch access services. So Dreamfolks effectively sits in the middle of this value chain. Now the question is, how does Dreamfolks know when the end consumer has accessed the launch? Well, that is where the technology platform comes into play. So whenever this end consumer swipes his or her credit or debit card at the airport launch, all the real-time data, like the end consumer data, benefits data, how many times customers has previously accessed the launch, all this data is captured into this technology platform, right? So that's the key value addition done by Dreamfolks. But I will summarize this value proposition of Dreamfolks in 3 simple points, right? So number one is the integration of all the key stakeholders into a single technology platform, right? So this card network and card issuer companies don't have to go to launch operators and build partnerships, because let's face it, it's not their core competence. Number two, this data capture done by Dreamfolks' technology platform, the real-time usage data, benefits calculation, accounting stuff, all that headache is also gone from the part of card network and card issuer companies. So that is the second value addition done by Dreamfolks. Third one is Dreamfolks, because they are an aggregator, their customers as well as their suppliers benefit from what Dreamfolks does, right? So launch operators get more traffic because of Dreamfolks, and this card issuing banks can run their loyalty programs. Their loyalty programs are designed based on this launch access and everything, right? So they can run their loyalty programs effectively without worrying about this operational stuff, because that is taken care by Dreamfolks. So this is the key value proposition by Dreamfolks, and looks like an established value proposition, right? So with that, let's just understand how this operating metrics have moved for Dreamfolks for the last few years. So number of passenger visits grew from 4.9 million to 11 million in the last 4 years. Revenue per passenger also grew from 752 rupees to 1000 plus rupees in the last 4 years. Likewise, all the operational parameters like number of clients, launch coverage, touch points, international destinations, all of these parameters grew at a healthy pace for Dreamfolks during the last 4 or 5 years. Dreamfolks has also been able to maintain a steady market share during this period. So the question is, why is Dreamfolks growing this fast? So the answer lies in the industry tailwinds. Look, India has amongst the lowest air travel propensity as compared to developed nations. So what is air travel propensity? Is the ratio of air passenger traffic to overall population, and that's amongst the lowest in India. But on the plus side, this air passenger traffic is expected to grow faster in India as compared to other countries. Domestic air traffic grew at a CAGR of about 36% during FY22 to FY24. So granted that FY22 was the COVID affected year, but still that's a pretty substantial jump in 2 years. And these air passenger traffic is expected to grow at a CAGR of about 11% till 2030. And number of airport launches is also expected to grow from 60 to 65 currently to 150 plus by 2030. Not only that, the number of credit cards in circulation and average spend per credit card, these metrics are also growing at a healthy pace. So it's like dual tailwinds for this for Dreamfolks' business model, right? Now coming to competition, Dreamfolks competes with two major international players. One is Priority Pass from the UK, and second is the Dragon Pass from the China. Now, these players are older and bigger than Dreamfolks, and they provide launch access, 1300 plus launch accesses worldwide. So they are clearly bigger than Dreamfolks. But in India, Dreamfolks holds the majority of the market share. So let's talk about the growth strategy of Dreamfolks. It is true that 90% of Dreamfolks' revenue comes from the airport launch access related services. The company wants to diversify away from this airport launch related services. So through Dreamfolks, the customers can now avail access to railway launches as well. The company covers about 100% of the available railway launches in India. Apart from launch access, the company is also adding other lifestyle related services such as golf access, highway dining, rooming services, doctor consultation under its service portfolio. The company also wants to diversify its client base, and that's why the company has recently onboarded airline companies, e-commerce platforms, online travel aggregators, hospitality chains, loyalty companies, etc. So the idea here is to reduce dependency on airport launches and also the current client base, including card network companies and card issuing banks. Right? So that's about the services. The company, so currently these non-launch services contribute about 6% to Dreamfolks' revenue. And the company aspires to take this number to 15 to 20% in the next 4 to 5 years, right? Moreover, the company also has ambitions to grow its global footprint. So the company wants to become a relevant player in the international market in this space, and particularly in the Southeast Asia region. The company is currently focusing on Singapore, and later on the company will cover the broader Southeast Asia region. So that's about the growth strategy of Dreamfolks. So with that, let's analyze the financial performance of the company. Before we get into growth and margin trends, let's just understand the basic P&L structure of Dreamfolks. So we already discussed that Dreamfolks derives its revenue from card issuing banks and it pays to the launch operators, right? So this launch operator fees is the largest Dreamfolks, forming about 88% of Dreamfolks' revenue. Employee expenses are about 2.5% of revenue, and other expenses are about 1% of the revenue. So that leaves an EBITDA margins of about 7 to 8%, right? So keep this cost structure in mind while evaluating the margin trends. Now let's look at the growth rates. So the growth rates declined during COVID times, but the recovery has been sharper. So during FY22, from FY22 to FY24, the passenger traffic grew by 3 times and the corresponding revenue grew by 4 times. because there was an increase in per passenger revenue as well, right? So there was a pretty good growth clocked by Dreamfolks during the last 2 years. Now let's look at the margin trends. So in FY23, the margins, EBITDA margins expanded from 7 to 8 percentage to 13 percentage levels, right? So this was due to positive operating leverage. See, Dreamfolks' business model is such that it can increase revenue with the same operating cost base and same employee base as well, right? So the operating leverage played in favor of Dreamfolks during FY23. But if you see in FY24, the margins dipped back to 8 percentage levels, right? So to understand this dip, let's look at the quarterly P&L trends. So as you can see, the problem started in first quarter of FY24, right? So what happened during this quarter is these airport operators increased the common area maintenance charges levied to the launch operators. So these launch operators correspondingly increased their fees charged to the suppliers like Dreamfolks. Right now, the usual cost escalation is about 5 to 8 percentage, but in this case, the cost escalation was whooping high at about 15 percentage. Right, so that's why Dreamfolks had to take an additional hit of 7 to 8 percentage. Now, management clarified in one of the concalls that this type of escalation is unlikely in the future, and this was one-off. But management also clarified one thing, that going public also revealed their margins to clients and suppliers, so that also had a slight impact on this margin dip. Okay, so that is something to keep in mind. Now let's look at the quarterly growth trends. So see, ignore the high growth rates in between because of the COVID bounce back, but the growth rates have been steadily coming down on quarter to quarter basis, right? So while the management was optimistic about the growth rates and they gave the guidance of about 20% CAGR for the next 3 years, but look at the latest quarter, the September 24 quarter, where the growth dipped to 12%. So this happened due to industry model shifting from spend-based benefits to the card holders. So what happens is that if up until now, if the person holds a certain brand of cards, they could go and access the launches permitted under that branding of card, right? But now the card issuing banks reinforce the spend-based limits to avail benefits like launch access. So because of that, the number of people who could access the launch came down, and that basically had an impact on the revenue. Now, management agreed that this type of increase in the spend-based limits was higher than what they envisaged initially, and they also admitted that they would not be able to meet this 20% growth guidance in the future, and this guidance will need to be revisited based on how this spend-based situation evolves in the coming times. Great. So P&L is done. Now let's come to the balance sheet. Look, Dreamfolks is an asset-light business, and its balance sheet aptly reflects this fact. But I want to draw your attention to the increasing receivables trends, especially in the latest quarter where trade receivables increased quite sharply. This also put pressure on company's cash flow situations, and that's why the company had to avail working capital loans during this quarter. So you can see that in the borrowings as well. Borrowings increased in the latest quarter. Management clarified that receivables increased because benefits budgets on the part of their clients, that is card issuing banks, got exhausted, and the new approval process took longer than expected, which stretched the working capital cycle. Now look, Dreamfolks deals with a stronger buyer base, right? The large banks, large card issuing banks. So the probability of bad debts is pretty low. But because of this strong buyer base, Dreamfolks doesn't command any pricing power. Also, Dreamfolks is vulnerable to any changes in the loyalty programs run by these banks, right? And also any cost escalation done by airport operators or the launch operators can also make Dreamfolks vulnerable to any changes in future. So that's why, to address this situation, as we discussed earlier, management wants to move away from this client base and service portfolio. So that's why management wants to onboard new clients, new corporate clients, and also wants to add new services beyond launch that we discussed earlier in the video, right? So management believes that this diversification of client base and service portfolio will help the company boost growth and margins in the long term. So that's the general direction that this company wants to take. So that was all about Dreamfolks. If you like the video, please share the video with your friends and also subscribe to my channel. Thank you.